Social media interactions become interesting only when it is two-way. You must get a fair chance to interact with the person you follow or the person whose videos you watch. I have started this new initiative, Ask Milestones to Wealth Anything, AMA in short, through which all of you can stay in touch, ask me questions you like to ask, clear your doubts on personal finance, learn more about Milestones to Wealth and about our PMS products, and stay connected. So this brings us closer. I'm able to be closer to you, to help you in whatever way I can. You feel closer by asking whatever you wish to, and we grow together, helping each other along the way. So fill in this form and stay connected through Ask Milestones to Wealth Anything. We've seen a spate of bonus share announcements coming our way. Normally, when you issue bonus shares, what is the company trying to convey? It conveys that it can service a much larger equity. It can pay a higher dividend on a much larger equity in the near future. It also thinks that its future growth in the business can be supported or can support a larger equity base. Effectively, a bonus issue is a signal to the markets that a company will grow faster in the future and that its future growth can service a much larger equity. But recent bonus issues by many companies does raise a different kind of a doubt, especially where a company issues many times more shares as bonus shares. The question that comes to our mind is, why is this company having to do this? But there is a different consequence of giving such a large bonus issue. The recent bonus issue of the National Stock Exchange is a case in point. It issued 4 shares for every 1 share. So the equity base went up 5 times. But whenever a company issues bonus shares, if a shareholder wants to sell the shares, he would only be inclined to sell the original shares because the bonus shares would be treated as short-term capital gain. Because the bonus shares would be treated as short-term capital gains. In the case of NSE, if the original equity was X, it became 5X. 4X, if sold, will attract short-term capital gains. So virtually the floating stock in the company reduces by 80% and only 20% of the shares would effectively be sold by shareholders. They would be hesitant to sell the other 4X. And this bonus issue happened at a time when the company is heading towards an IPO. Now connect the bonus share and how the share price moved after it became clearer that an IPO was closer. We've seen other blue chip companies also coming out with bonus. I think that this bonus issues help only in one way. If there's a 1:1 bonus like Nestle, half the equity goes out of circulation, the floating stock comes down, and relatively the stock price and the valuation of the company come under lesser pressure for a brief while, maybe 1 or 2 years. 1 year until the stock becomes long term and another year with a lag effect. So the sellers defer their selling of the bonus part of the equity. And I think more companies are using bonus issue to kind of reduce the floating stock and stabilize valuations. It's not openly stated. Obviously, no one is going to state this, but looking at it, gives us the impression that maybe somewhere somebody is thinking like this. Because there is no reason other than that to issue these bonus shares, because the company is already trading at a high valuation, and for the growth to service a much larger equity and still sustain this high valuation is actually a tall order. It's a big ask. So there's no logic in excessively valued companies giving very generous bonus issues. Having said that, we are seeing a spate of bonus issue announcements. There's going to be a lot more in the coming months. And effectively, you can track the valuation of these companies ex-bonus and see what happened. And see how the shareholding pattern, especially the public shareholding, changes from pre-bonus to ex-bonus. Because I think a lot of people are habituated to buying shares in companies that make bonus announcements. And as a result of that, that further reduces the floating stock pre-bonus. And the shares that are bought pre-bonus will not be easily sold ex-bonus. I mean, everybody will hold on to the bonus shares at least. So half the shares won't be available if there's a 1:1 bonus issue. If it is a 2:1 or a 3:1 or a 4:1, proportionately, fewer shares will be available for trading, thereby keeping the valuation of the company always elevated. So to me, this is the consequence of several bonus issues, especially the more generous ones. Let's see what happens in the coming years to all the companies which are announcing bonus issues. Let us see whether their valuations moderate in the coming years or at least stay where they are. I'm very curious, and I'm sure you are too. Thank you very much.